Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Wednesday, May the 1st, 2013. Well, a change of trend today in a candle that's made a lower high and a lower low, a very large black body candle, denoting the sellers making a substantial amount of net bearish progress on the day between the open and the close. We've also seen the sellers close down at the low pretty much, so suggesting that the sellers have taken control, and the sellers have shown very strong commitment throughout most of the trading day. Now, for the previous day's trading, we had this potential hanging man type of pattern. I suggested that it wasn't quite a good pattern. The size of the body was a little bit too large for a good type of pattern, but I did also mention that the small body in comparison to the previous body of the day prior to today's trading suggested that the buyers had lost some momentum, and little wonder when they were trading towards this 1600 round number level of resistance, and it's an area that has held as very strong resistance in the recent past, and the market has been strongly rejected from there. So that loss of momentum gave us a bit of a tip as to this potential change of trend. And obviously we've seen the, as I've mentioned, the influence of the 1600 round number level of resistance, but a very, very solid bearish day today, and a possibility of a test down to the support around the 1576 level, previous resistance support in the recent past, and will be a crucial level if this market is going to find the buyers coming back in. Below there we have the kitchen center trade and Tenkan-sen trading around the 1568 level, and then potentially strong support down around the 1555 area. Now, in terms of patterns, there is potential for this market to form a potential double top pattern. Here we have the prior trend leading into the pattern and a significant trend, so this could potentially be a major top. We have the two peaks around the same level roughly, and an intervening trough which will be the lower boundary of the pattern. So the upper boundary here, lower boundary around this level. This pattern is confirmed by a close down below the intervening trough, so that is around this 1536 level. The only problem here is obviously the cloud is around that level, and the market will be interacting with very, very strong support, not only from the intervening trough but also from the top of the cloud. So not terribly confident about the potential for that pattern to occur. Now, sometimes the using Bollinger Bands can be very effective in deciding on the probability of the potential for that pattern to actually occur. And in terms of Bollinger Bands, this is what's called an M top, and basically forms an M. It's basically a double top with these highs around the same level, although with the Bollinger Band type of M top, this second top could be a bit higher. But essentially what's happening here is that and it is a little bit hard to see, the Bollinger Bands are in blue overlaid on the top of the Ichimoku charts, but that first peak actually closes and tests outside of the upper band, telling us something about the strength of the market, that the market has very, very strong upside momentum at that point in time. The market retraces back down towards the middle line, which is the moving average, but in this case it has retraced all the way back down to the bottom band and then bounced off, and then the following peak doesn't actually trade outside of the band, and that tells us that the market at that point in time has less strength than the previous peak. So what we're seeing here is that on the second peak here, the buyers don't have the same momentum that they had on the previous, and therefore suggesting that we have a divergence here and a potential for that top to be completed. The only thing here is that also with the double top type pattern, we do need confirmation of it, and confirmation would be the breakdown below, but it does give us a little bit more confidence in a potential breakout. But considering that we have this very strong support at the top of the cloud coinciding with that intervening trough, doesn't really suggest that there is good potential for that pattern to be completed. Now, in terms of the Fibonacci extension, and now that we're in a new first time frame downtrend, we're examining the relationship of the first time frame downtrend to the previous time the market's trending down, and here the market's traded through all of the important areas in one go. Not much of a previous downtrend to compare it to, however, but the market has tested just below the 100% level and closed at that level, so there could be a change of trend back to the upside, but certainly the sellers are favouring continuation of the trend to the downside. The buyers have no strength in this market for today's trading, and it does suggest a potential test down to the 161.8% level at 1573 coincides with the swing highs around this area here and recent swing highs, so good potential for the market to test down to those levels. And with the Fibonacci retracement traded through the 23.6, the 31.8, the 50, the 61.8%, and testing to the 78.6, closing just above that level, some price rejection from there. The market doesn't look strong in terms of that happening. The 100% level is a level we should be watching, and that coincides with that swing low in the recent past, 1577. But then also the 161.8% is trading at 1565, coinciding with the swing lows down around this area. Now, in terms of Ichimoku, obviously a bullish market in the long-term time frame, with the market trading up above the cloud. And the market's also trading above the Kijun-sen and the Tenkan-sen, so the market is bullish in the medium and long-term and short-term time frames, and the Chikou span is above the corresponding price action, so it's confirming what we're seeing in this market. This does suggest that this market will potentially find support down around the 1576, or perhaps the area around the 1566 area, 1568 area, where the Kijun-sen and Tenkan-sen are trading. Test off there in a bullish manner, trade back up to perhaps the 1600 level, and we do need to watch how the market reacts around that level. If we do see another potential sell-off, then we could see that holding as a top. But then if either of these levels break, the 1555 level is important, but then very, very strong support down around the top of the cloud, and that will be a crucial area based on what we're seeing with this potential double top and the potential Bollinger Band M top.